Hello everybody, my name's Drew Demon and I am the Devil Stockbroker. This video I'm going to be updating the entire meme market, focusing on the top stocks that have been mentioned on WSB and other subreddits, as well as focusing on our favorites, AMC and Gamestop. The IWM is the first thing that we'll take a look at. So right now we are looking at a clear double bottom on the chart for the IWM. The Russell 2000 is by far the most condensed amount of different stocks that are in the mid-cap range, which consists of stocks that are very similar to AMC GME, especially heavy in retail and entertainment. So this is a good barometer for what the market is doing. And right now on the weekly chart, it would appear that the market has gotten a little bit of a bounce into it. So on the weekly EMA, we see that it has risen back above its 200 period weekly EMA. This is a good sign for the market. It needs to hold up this level of support at 185, and it cannot break below 180, or we are back into bearish territory. The main thing that we want to see is for the market overall to reject its 200 moving average and continue to move back to the upside, so that we can see crossovers of its 50 and its 100 period moving average. This would keep the market holding up, and we are in a good spot to do it. As you can see, the RSI shows a bullish divergence along with a higher low on the PCO, that's our price cloud indicator. Also, the volume direction candles are starting to show just a little bit of strength here. So what we need to see is for the volume direction candles, which is essentially a modified on-balance volume indicator, for this to break to the upside. If it was able to break its fast moving average and even touch its slow moving average at this level, then we would see enough buying pressure to push the market back up above 200. This would be extremely good for all of the favorite stocks on the various subreddits and in the meme communities. Focusing in on the first of our stock picks, we have AMC, which has been showing itself to be very bullish recently. The last couple of days, we actually printed a double bottom here where it bounced off of its daily 50 period exponential moving average. The overall pattern altogether has created a very clear bull flag where we're seeing a descending line of resistance right here at around $7.80. A breakout would occur after a close on the day above $8. This would be a beautiful setup for AMC to continue moving to the upside. Further to this point, AMC has actually set up a new set of lower lows where it has appeared to have begun a Wyckoff spring. It's a bit early to tell yet. Wyckoffs are extremely difficult to spot clearly, but we do have, at least on the weekly chart, a very clear spring that bounced here at the $5.50 level. So this double bottom pattern on the weekly chart is very bullish for AMC. What we need to see is for it to break above this $8 level and to continue the momentum, crossing above its 200 period daily moving average. That would be this red line right here. If we take a quick break to go look over at our ScourgeBot 13 and 48 EMA crossover strategy, we see that AMC is toying right at that exact level. The 13 and 48 EMA have been crossing over multiple times on relatively low volume after a big push to the upside. This is a moment where AMC, if it's able to get a little bit more volume and push a bit further to the upside, that we can see more technical patterns working in favor of AMC and likely to cause algorithms to jump on the long side of the trade. If we go over to AMC's gamma squeeze ramp chart, we can see that AMC has just now established a new high of 4% of its float at the $10 strike level. If AMC crosses above $10, then more than 4% of its float would be in the money for the duration of December. This is a significant but not quite gamma squeeze material, but every little bit helps. What's really gotten my attention for AMC is the amount of short exempts that have been traded on it. If you look over, focusing in on a short exempt ratio, which shows a percentage of short exempts, those are trades made by market makers and brokers, shorting a stock without locating a borrow over the short volume in total. As you can see, back in the second week of November, there was an extremely high concentration of short volume in this week of trading. The short exempt volume was consistently above 3%, with a all-time high of 6.7%. The higher this number is, the more shorts are being used as short exempt versus just regular borrows. And this puts market makers and brokers in a position where they must be able to locate these shares within 6 trading days. If the price continues to move up in this direction, then they never get a chance to cover these shares at a profit, which reduces their ability to continue to short it going forward, and it increases their risk every time they decide to do this. So if AMC continues to push while short exempts are continuing to pile up, then this puts all of the market makers and brokers behind the 8 ball and forces them into a position where they must either continue trying to do this even though the momentum of the trade is against them, or begin to cover and actually assist the trade to the long side, helping to squeeze shorts. AMC short interest has been continuously piling up, achieving a 89.2% short score on Ortex, with 20% of its free float sold short and 35% of its free float on loan. This is a really significant portion of the stock, and as you can see, it's been maximum utilized for a long period of time, since about February of 2022. So AMC is currently in a good position to actually squeeze shorts because the days to cover have been growing. The volume has been increasing only slightly, but the price action is moving to the upside, and shorts are now in a net neutral position. A little bit more price action to the upside, causing more shorts to get behind on their trades, could be enough to start enticing some of the bigger positions to begin covering their short trade and squeezing out the other institutions. Nothing is certain at this point, but I do want to point out that AMC met all of my triggers for a short squeeze to occur within 30 trading days since the time that I had actually uh, analyzed this week of trading. Consistently, what I have found is that stocks that are 100% utilized, meaning 100% of their lendable shares are currently held out for borrow, plus the short exempt ratio is greater than 3% for 3 or more consecutive trading days, plus 3 or more consecutive days of trading where the 5-day SMA delta rate is above 5%. That means that the stock's moving average is climbing at a rate of 5% every single day for 3 days or more. AMC had 4 of these days in a row, and the price has been stagnating sideways despite still high short volume. So this is actually quite bullish for AMC. Any shorts that are still in their positions may now be feeling some pressure and beginning to sweat, but we need to see at least another 5 to 10% gain per day for a solid week of trading for things to really start moving against the shorts. I'm going to jump over to Gamestop, which has seen quite a bit of decline in the trading today. Gamestop, which was currently trading above its 5-minute 200 period moving average up until the very end of the trading day, got slammed down in the last 5 minutes. GameStop's daily chart has been filled with chop and indecision for at least the last several months. Since the beginning of September, it's been basically ranging in this range between $35 and $22, still hanging down below the $28 level. Excuse me. GameStop has set up a new area of support down here. Consistently, GameStop has not wanted to break down below this level of $23.25. It's been rather consistent about maintaining this floor. And since creating these lows in March and May 2022, GameStop has created a rising floor of support. It did have this one death spike candle that rebounded very quickly in the days that followed, with a big gap up on Thursday, November the 10th, sending GameStop's price up to a high of $25.70. I mentioned in a previous video that GameStop was actually setting up to squeeze if it was able to break $30. And there's actually a couple of folks, particularly S3 Partners CEO Bob Sloan, which stated publicly, I believe it was on a Bloomberg interview, that he saw strong bullish momentum, and if the stock were to break the $30 level, then it would be a candidate for a pretty spectacular short squeeze. This is the guy that we're talking about. Bob Sloan manages S3 Partners Fund, and specifically what he is calling out is a sharp uptick in price where shorts have been accumulating positions at these low levels and saw a really sharp climb in the price after GameStop dropped down to a low of $21.89 on the 9th of November. So I'm going to go ahead and analyze the Ortex data, which shows that there is a spectacular amount of short interest against GameStop. With a short score of 89.5, short interest percentage of free float is above 22.5%, and the percentage of the free float on loan is above 36%. Utilization on GameStop is 100%, and it has been at this level since February of 2022. You'll notice that both GameStop and AMC have extremely similar levels of short interest versus its free float and similar dates when they became fully utilized. I do not for a second believe that this is coincidence. GameStop and AMC are both linked together by the same cause and by the same level of conviction from retail investors, who have been feeling tremendous amounts of pain over the last 2 years while dealing with this corrupt market and trying to scratch out a winning trade out of this highly manipulated market. Over the last several months, the days to cover have been steadily rising on GameStop, just like AMC, and on a 3-month average of days to cover is above 18.9 days. Both of these stocks show extremely little availability according to Interactive Brokers' short share availability chart. And further to this point, we've seen steadily growing levels of shares sold short on GameStop's short interest position changes on a month-over-month basis. We saw an incredible surge of short interest take place right at around $35 on GameStop starting on July the 22nd. GameStop popped shortly after that and then was driven further down by even more short interest. From this point forward, the average days shown in the light blue line have been climbing, indicating that shorts have been holding onto their positions and adding new positions as the stock has ticked downward. But since hitting this floor with a minimum of $23, GameStop has been unable to break down any further, and shorts that have been holding their positions are starting to suffer from a higher and higher cost to borrow rate. So those shorts who have been in this position for an extended period of time are starting to feel some pain from the number of short borrow fees. By itself, however, this is not likely to be enough to catalyze shorts to cover their positions. So why is the $30 level so significant? Well, it's because of Gamma. The Gamma ramp chart in front of you, generated by Hell's Trading Floor's proprietary Scourge bot, shows that more than 40% of GameStop's float would be in the money on the options chain for calls if the price were to extend past $70. Starting at just $30, GameStop goes from 5.9% of its float in the money all the way up to 15%. And every $10 mark brings up another 5 to 10% of its float in the money as the price increases. So if the price starts to run away at this point, starting at $30, you have a tremendous percentage of the float running in the money, which is what makes GameStop a particularly good candidate for a short squeeze. It's not just because of the higher short interest, it's also because of the call options chain, showing that there's such a huge amount of calls that have been sold short on GameStop in this area right at $30, where the price has been ranging for the most part for the last several months. Any shorts who sold calls in this position have to make sure that they have enough shares to cover the position if it goes in the money. If they have been selling naked calls, meaning they don't have the underlying stock to sell if their calls get assigned, they will be forced to buy shares. In addition to having a short position on the stock, this levers up their bet and causes their short interest to more than double. So assuming, and this is a big assumption, that GameStop's call chain is mostly naked calls, then you could see a situation where GameStop's short interest may actually greatly exceed more than 60%, even 80% as you get to prices above $200. Obviously, this is a very, very long shot, but for GameStop to go above the $200 level would actually result in more than 80, even 90% of its stock going in the money. It's not a likely scenario to see play out, but if it were to happen, there would be so few shares available in the market that it would be literally mathematically impossible for shorts to cover all of their positions. To even get started on this trajectory, though, GameStop must break $30. and it must continue to surge forward past that in order to put that kind of pressure on shorts. Very similarly to AMC's short exempt data, GameStop has also had multiple days above 3% short exempt ratio, but we haven't consistently seen it happen 3 consecutive days in a row. In addition, the 5-day SMA delta rate, or the rate of change on the 5-day simple moving average, has not exceeded my 5% rate of climb any day in the last 30 days. So this is not a good case for GameStop, because in order for it to actually put pressure on shorts, the price needs to be moving in an upward direction already, as they're continuously piling more money into their short bets. For shorts to truly lose control, GameStop must break the $30 level and keep going in order to start scaring them out of their positions, and for bulls to get more confident putting their money on the long side of the trade, pushing shorts out and starving them of precious little supply of short shares. Next, I'm going to move on to Vinco Ventures stock. This is ticker symbol BBIG, which I have stated has been in a Wyckoff pattern for multiple weeks. BBIG has sold off significantly, creating this descending wedge that I've been calling out for months now. It broke it and held outside of this wedge and has been maintaining a floor at just under 67 cents. BBIG now has confirmed, or at least appear to have confirmed, a bounce at this level. What I would like to see is for BBIG to continue moving and recapture this level of resistance here at 85 cents. If BBIG can maintain this level and hold it consistently for another solid week of trading, then 2 possibilities. We can either confirm a double bottom in this range, or we could come back down, test a higher low, and then recover, and this would create a inverse head and shoulders pattern, resulting in a breakout above 85 cents to where we can see BBIG recovering back to at least $1. Some additional confluences that are in favor of this are this bullish divergence that you see here circled on the RSI chart. Additionally, on the MACD and price cloud oscillator indicator, we have a bullish crossover forming here on the PCO just outside the price cloud. A bullish divergence on the RSI that is in conjunction with a bullish crossover on the MACD fits both of my critical signals for my bullish swing strategy to work. In addition, there is the volume direction candles, which acts as an on-balance volume indicator for BBIG, and we've noticed that every time that BBIG starts to consolidate just underneath this fast-moving average, there's a big pop that happens in the price. We actually just crossed below in the last couple of weeks, and we've been still maintaining a very shallow undercut of this level of volume. What this indicator is telling us is that while shorts have been hammering down the price, bulls are still present, and there's not actually enough volume to push the price and keep it at these levels. There's very weak protection of these price levels. The resistance isn't really there. What's missing is volume to push the price up to these levels and actually break through the resistance at 85 cents. This is a critical price point for BBIG, because once it does break it, it can easily recover back to $1, because there's so little volume traded in this region that there would basically be nothing standing between it and $1. That air gap that sits there with the lack of volume in this price range is what could lead to BBIG running past this level. In addition, a whole bunch of BBIG longs and bulls have been purchasing in the money and slightly out of the money call options for January and later in the year of 2023. If I could briefly direct your attention to the call OI percentage of free float, this is a table which is very similar to our gamma squeeze chart, but breaks it down by strike and expiration. You'll notice a massive concentration of calls at 50 cents, $1, $1.50, and $2 for January 2023. And then after that, April the 21st, 2023. This cluster of calls that are sitting on the call chain for BBIG easily creates a gamma ramp. If it got moving by December and put all of these in the money, then it would effectively squeeze any current shorts that have been selling covered or naked calls against BBIG up until this point. What we want is for bulls who purchase these calls to get their shares by seeing the price drive past $1.50 by December, ideally, but at the very least before January 2023. An additional bonus to having this happen is all of these puts, which are currently in the money for BBIG at $1, would expire worthless if we could get the price above $1 before December 16th and put all of these puts basically net worthless or only holding a small amount of extrinsic value by that time. There's not a whole lot of puts, so there's not a lot of bears betting on options for this stock, and it doesn't make sense for them to do so because the price is already so low. But if we want to prevent a reverse split on BBIG, the price needs to maintain that $1 level for 10 days, and that's going to require volume and positive price pressure. To indicate the importance of these price levels, I'm showing you the gamma ramp chart for December, which includes all the expirations occurring in December, including weekly expirations. BBIG at $2 would have more than 8.6% of its stock held in the money. It's not a massive portion of BBIG's stock, but knowing that BBIG is already majority held by several different bullish institutions as well as retail investors, this would be a huge win for bulls, transferring ownership of that stock over to them and putting all of those institutions who sold short and sold covered or naked calls against them to lose massively and begin to start, sweating the pressure of having lost access to those shares. If you include the call chain for January 20th strike alone, then you also add an additional 4.5% of that total float on top of the December calls. And this doesn't include any of the other adjusted options, which include shares of Tide. There are tens of thousands of those shares still available, which are expiring on January 20th, that make up a significant portion of the float also. But these aren't I can't calculate these because they're hidden on the options chain, and our data provider doesn't give us access to reading them. For BBIG's short interest, I did happen to notice that the days to cover rapidly climbed almost like straight up into the sky from just 3 days to cover all the way to 6.5 days to cover. The short interest on BBIG is still holding pretty steady, but what we're seeing is that the price is starting to pull back against them, and shares for borrowing are less and less available. We're currently sitting at 85% utilization on BBIG, which is a little bit low compared to where it's been steadily holding over the course of the year. Utilization on BBIG since the beginning of the year has been pretty much maxed out at 100%. We're still noticing that cost to borrow is in decline, so I have a feeling that shorts are preparing to get out of their positions. They know that something is going on, and so far the rest of the market hasn't caught on. It'll be most important for BBIG to break that 80-cent price level because below this price level, this is basically where all of the most recent shorts have been adding to their positions. So if BBIG screams past the 80-cent level, then it's going to start putting a whole bunch of shorts that have been holding their positions for longer than a month underwater. That will finally entice some of them to cover, and then we can start to see the price rise. And that's what I talk about when I say runaway and a big air gap in trading, because it's so far only been shorts pushing the price down from that $1 to 70-cent level, and they've been holding it there. So if the price starts to move against them and they start to go red on their positions, they'll be encouraged to cover very quickly because they understand that there is a merger going on, and BBIG does have the potential to turn around rapidly given the number of eyes and attention on it from the retail community. The last ticker that I'll cover in this video is MMAT, Metamaterials Incorporated, which was speculated to be a Samsung partner building some of the flexible screen materials for their company's smartphones. Metamaterials has seen a big surge in its stock price on the daily chart, working from the 7th of October up to a high of $2.68 over the course of 45 days. This has been an excellent run for Metamaterials, and I don't think that it is quite over, but we do need to see some strength here at a critical price level of $1.80 in order for Metamaterials to keep moving forward. What you may notice about this stock chart is that it seems to be setting up these floors or these rising lows. This is actually consistent with another type of chart pattern called a parabolic curve. Parabolic curves, true to their name, create a big slope like so. But what they do tend to do is once they finally come up to their new high point, whatever that may be, they tend to come crashing down pretty harshly. So it's entirely speculative what this would look like and how many step ups there would be. But what you do need to see is that once it establishes a new floor, typically at about a 50% retracement level of the previous high, that's where you need to see it holding up support. If it breaks those levels, then that would indicate that there's weakness in the stock and it's about to come down. So measuring that, you would look for a 50% retracement level from its previous leg. This is the 50% retracement level, so this is the previous low. And you see this one coming down to test that 23 retracement level. From this low to high, now the stock is retraced all the way down to its 78% level. So this is a significantly stronger pullback this time. If MMAT does go on another run, you need to be very careful for weakness in the stock once it takes out this high, because once it does, then there's no telling when the pullback will finally bring it crashing back down. So you have to be really cautious taking this kind of a play, just because it's already run so much. And even though it does have potential to keep going, there is plenty of short squeeze potential in this. It doesn't add up to a certainty, no matter how you look at it. As far as bullish indicators go, you still have some very good pullback on the RSI daily chart, which shows that it's still holding up support. There's not been any bearish divergence as of yet, but it's getting close. And if it doesn't see a new big push to the upside, then you'll get bearish divergence and the technical patterns will start to turn against it. Also, you have the MACD indicator, which is threatening to cross down. So this is where you start to look for bearish positions after this cross down occurs. It hasn't happened outside of the price cloud yet, but I would expect that after another big push to the upside, after you see a bearish crossover on the MACD, that's when you're going to start to want to look to get out of your positions very soon, especially if you see a bearish cross down coinciding with a bearish divergence on the RSI. That's when the price creates a higher high like so, and you see the RSI create a lower high, so downward slope on the RSI. While MMAT doesn't have quite the same level of short interest as GameStop and AMC, it does have a pretty significant level of it, 11.8% of the free float, which is significant, and 12% of the stock is totally is held out on loan. That brings it up to about 38.5 million shares. That's a total short position that adds up to more than the combined number of assets held in MMAT by the two largest institutional holders, Lambda Guard Technologies and Innova Corp. What you may notice on this chart is that between these two institutions, Innova Corp and Lambda Guard, neither one of them have sold any positions. They've been holding consistently their level of current investment in MMAT consistently throughout the entire merger process that took place in 2021 between MMAT and Torchlight. We've also seen a big cluster of buys from institutional investors and insiders, specifically directors and the 10% shareholder, Thomas Gordon. The CEO also purchased a pretty large, significant sum of shares as well. Analysts so far are still maintaining a consensus for a $3.50 take profit on MMAT, so this is the level to watch. If you ever see MMAT hitting this or approaching this $3.50 price level, that's where institutions are looking to take profit on their trades. So you need to be really careful if MMAT starts to run to that level. From where it's currently sitting, that would actually put MMAT at around an 80% profit from its last traded price closing today on Friday. That's going to be it for this video. I want to thank you guys so much for watching, and I hope that you found the information useful. I'll see you next time, but until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com which will allow you to sign up for our Discord at discord.gg/Hell's Trading Floor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.